So now I'm going to invite a couple of people to come join us on stage. So if I could have Oleg Tscheltzeoff, the worst at pronouncing his last name, who is currently the CEO of Fotolia and business angel. If I could also have Pierre Kosciusko-Morizet, who is the CEO of PriceMinister and also co-founder of Isaïe. We have Michel de Lempdes, who's been the director of the ICT investments at Crédit Agricole Private Equity for the last 10 years. And we also have Stéphanie Hospital, who is VP of Marketing and Business Development for online advertising division at Orange. So I'm just gonna, we have a couple of microphones to share. I'm gonna start with Pierre, because it's obviously a hot topic. Bonjour. Thank you for coming. So I'm wondering if when you started PriceMinister back in 2000, if you ever imagined that a couple, what was it, 10 years later, you'd be selling it to a Japanese company for 200 million euros?
No.
When you started, kind of, what was your idea for an exit?
Okay. No, I mean, I didn't think. Well, I didn't think about any kind of exit or amount, of course, and I didn't think about Japanese at all, because I didn't know Japan at all, and actually I didn't know Rakuten. I learned about Rakuten a few months before they bought the company, so I didn't know them at all. I mean, it's kind of obvious, and I think you've heard that plenty of time, but I really feel that if you start a company just thinking, you know, what should I do to sell it, I think you might not sell it or not sell it well. So I think when you start your company, you want to realize something, you want to actually do something for changing things, and also you want to do something for yourself, like, you know, just you want to have fun in doing a project that you really where you have a lot of ambition for, and that's really what we felt. And so we didn't think about selling. Although, of course, we were not completely naive. Since we had investors in the company just 1 month after the launch, we knew they would look for an exit at some point. But we didn't. I was not financial at all, so I didn't really think about it, whether being a fund buying the shares of the initial shareholders or IPO or whatever. What changed a little bit, actually, is that we founded the company in late August 2000, and in December 2000, we didn't have opened the site yet, but France Télécom made us an offer to buy us, which was a bit surprising, because they were buying companies that had no internet site. But then they changed their mind, and they launched a copycat 2 months after, that died a year after. So actually, we start from right from the beginning. We had the feeling of competition and of, you know, potential exit. But then we thought that this discussion had been so frustrating that we refused to talk about any exit for many years. And then we met the Japanese, and it was different. But then I think you need a few years without thinking about that and just building your company, so that you're not you don't lose focus on building what you're building.
Okay, so I guess you went through an evolution with what you thought the exit would be for your company. Maybe you can walk us through. Did you ever think that you'd do something other than an acquisition?
Yeah, that's kind of, there are two things like that: what you imagine for your company and what you imagine for you personally. And of course, it's linked a lot. But the aim at the beginning was really to build something very big, with knowing that it was hard and that it might fail. But we really wanted to do something very big. And there were a few years during while we thought it would be very big, and then, funny enough, at the time it kind of really, started to grow fast. We kind of thought, okay, it's growing fast, but it will never be that big. So we had like 1 or 2 years like that, and then we had VCs coming in, 3i, that invested a total of 11 million euros, and that was really the start for new ambitions. And then we started buying some other companies, and opening into Europe. And so there were these kind of 3 phases. And 2008, we wanted to do an IPO in April, so that was probably the worst month ever. Because later on you knew you could not do it, but April until end of March you thought you would do it. And so that was another phase where we thought, okay, let's forget to think about, exit, IPO, whatever, just go back to work. And actually the meeting with Rakuten came at a time that was probably not the time we would have imagined to do either IPO or partnership or selling the shares. Which is fine. I think that it's like you meet interesting people. Probably not when you feel like you're gonna meet a very interesting person. You meet people when you're thinking about something else. I think it's probably the same with companies. But of course, when you meet them, you can have a good deal if your company is a good company and growing fast, etc. So that's the only thing you should focus on.
Okay, so we have one person that's done an exit on this panel. Somebody who is maybe thinking about an exit is Oleg. And I don't know if a lot of people, we always call Fotolia a French company. It's headquartered in the US. Is that for a reason related to an exit?
New York is known to be a media city, but in fact, most of our business is in Europe. So
it has no reason, nothing with the acquisition or IPO market?
No,
okay.
not necessary.
Okay.
Well, for an IPO, if we have an IPO strategy, I think it's still better to do IPOs in the US because multiples are much higher, in fact, than France or Europe by far, Nasdaq. So this could help. But apart of that, no, it was just historical and where the founders were based.
And if we look at, Fotolia was founded in, I think, 2004.
2004, yeah, end 2004.
Are you at a stage now where you're looking at an exit?
Well, we did, a transaction, with a private equity firm, and part of the shareholders cashed out, and there were money put inside the company, and some, stayed. So, I think the most important is to build a good company before, even if you need to know who can buy it, it's very important, I think, you cannot just wait that the train passes by. So you need to have a constant work, and where your company is big enough, it's good to have advisors or maybe bankers, who work with you all the time just to keep, a relationship with your potential buyers. But the CEO and the management team should focus really on build a good business, and a good business, it means having a high growth and making money.
Okay. So if we kind of flip that around, so you're not just at Fotolia, you're also a pretty active business angel, to give you a lot of credit for that. And I think we have Michel here, who's also been doing investment for about 10 years, if I understood correctly.
Yes.
Working with 8 companies, is it?
Absolutely, being a board member in 8 companies today.
I think a couple of them were Mon Showroom.
Splendia.com, Oclio.com, many e-commerce companies and media companies as well.
So if we look at, for example, and I think also Pierre does an investment as well at Isaïe, if we look at the entrepreneurs that come to you with their business plans, are a lot of them really well thought out exits from the get-go?
Well, as Pierre said, I think at the beginning, founders should not think too much about exit. They just should start thinking about how they could create big business and how they could grow. This being said, as soon as they come to us, venture funds, our business model is that we need an exit because we have to give the money back to our LPs after the lifetime of our funds expires, more or less 10 years. So as soon as funders go to people like us, the message has to be very clear from the very beginning. We need an exit. It doesn't mean that we have to speak about an exit every day. That's the reason why, in fact, we agree from the very beginning with funders in the shareholder agreement on what we call a liquidity event. Let's say if we invest now, let's meet in 5 years from now to decide if an exit is doable, which kind of exit we can target, which banker we could select. And if it's, if we cannot exit at that time, it doesn't matter. But at least this is the best way to be sure that our common interests are aligned. And this is it. Yeah.
So what possibilities for an exit actually exist for companies people who are in this room on this side of the Atlantic, I mean, I'm asking kind of everyone on the panel, I'll start with you. We look kind of across the US, we see companies getting bought left and right, we see people doing IPOs now almost every other week. What's there in Europe?
Well, the most common is probably M&A, for sure. I will come back on that. Second is probably IPO as well, more difficult. But now we're seeing more alternative to that, which are buyouts, especially for web-based company. I mean, since, you know, the reason for why tech companies were not very keen on going on buyout is that technology is mostly cyclical. And so it's not good for a buyout. But now with web-based companies, less cyclical, buyout could be a solution for an exit. We are also seeing some new things, mostly in the US, but with a potential exit with tech equity firms like Francisco Partners, for instance, buying most of the shares of one company in a specific field and then deciding to making the business grow and to work on build up solutions and just to go IPO later on. So I think, I mean, for sure, M&A is still the most common way. IPO is always a matter of window, and the conditions are, I think, more and more difficult to reach. Talking about growth and profitability, and a real roadmap to sell to the markets. But we are seeing some new things coming, like buyout and tech equity firms.
You guys agree?
Yeah, of course. No, what I wanted to say is that I think by starting a company in France, you have a very big chance, you know, to have an exit or to have a good company. I mean, for your life, why not? You know, if you make money, it's also good. I mean, so normally, if you have an exit, it means you have a good company.
So what do you mean? If you start a company in France, you have a very good chance to have a good exit?
If the company is a good company, I mean.
Okay.
So if you have a leading position, you know, it's still the fourth or fifth market internet in the world, so it's a big market. Of course, it's not as large as the US, but it's a big market. But I think it's important to choose the right verticals. So if you want to start a competitor of Facebook in France, I mean, I think you have very little chance. I mean, on the other side, if you need something, you know, e-commerce, you know, and more local, where you need logistics, you know, and need to understand a little bit how France works, I mean, here you have all the chances and...
Okay, well then let's get into the specifics. I mean, you said e-commerce. We have tons of e-commerce companies. Are there other areas that, I mean, is that mainly the primary area that we actually have for exits in web companies in France, or are there other possibilities?
Sorry, I'm going to say something quite stupid, but I think quite basic. You basically exit when you have a positive EBIT. So if you're profitable, you'll find an exit, and if you're not profitable, you can find an exit, but you have to find it very quickly. Okay, so I mean that's mainly it. So then of course, if you are profitable and you happen to be strategic for a buyer, the multiples that the buyer will apply to your profits will be higher. Okay, and if you're not strategic for anyone, maybe you'll pay some dividends, or you'll find maybe a buyout with a fund that will put some debt or that kind of thing, but not at a very high price if you're not strategic for anyone. So I think that's, I mean, that's really the only thing the founders of the companies and the managers should focus on. What I feel actually, on the contrary, that the investors should focus on the exit. I mean, not focus, but so I really feel that your investors should think about your exit, and you should think about increasing your profits and realizing your vision. And I think that when you do that, you always, you know, you always end up well. Then of course you can be more or less lucky. So maybe at the very good time, like with a very steep slope, you find someone for whom you are strategic or that kind of thing. But you cannot really bet on it. And I think that we for example, at PriceMinister, we've had many talks with one potential acquirer that could look as an obvious acquirer at some time, but actually it was really it had really a negative effect on us, because basically they would call us in and say they're very interested, and we would start to think about it and not focus on our development, and then they would have something else to do, and they would say, sorry, we call you another time. And so I think you really don't want to focus on building the company for acquirers. You want to build it for a bit, and your investors will think about it for you. I don't know investors who will forget that. So.
Well, I agree with that. I mean, just to remind you a figure, in 2010, do you know how many web-based companies, French web-based companies, have been sold for more than 50 million euros? Only 5. I mean, so PriceMinister has been one of them for sure, but you see, we're not talking about so many companies. What are the reasons for that in France or in Europe? I think we have 2 reasons. First one is French companies or European companies are probably less acquisitive than in the US. And the second reason is that probably for a US company to buy a French company or a continental Europe company is something difficult, especially when you're talking about technology, because when you are trying to sell your company, for instance, to Intel or to Microsoft, it's difficult because Microsoft has no R&D activities in France or especially in France. It's the same for Intel. So, it's more difficult as a conclusion to create competition. And at the end of the day, the valuation you will get for your M&A depends only about the competition you will be able to create. And as the French, European companies are less acquisitive, you have less American companies or even Asian companies interested in European companies, more difficult to have very high valuations. The conclusion of that is, as Pierre said, in Europe, we should probably reach profitability much more quickly than in the US. It's a key thing. Profitability is, without profitability, it's very difficult to sell a company. And the second conclusion for funders is that don't raise too much, because valuation in Europe are lower than what you could get in the US.
So I'm actually going to ask Stephanie to comment on that, because she represents Orange, and she also went through 2 of the recent acquisitions, which were Deezer and Dailymotion. So for French or European companies that aren't doing a lot of acquisitions, that's 2 within the last year. Not too bad. Maybe you can comment actually on that. I mean, is that true? Is that a fair statement to make?
Yeah, but don't expect too much about a player like Orange. And when you, sorry to say that, but when you build a company, think first maybe of building a profitable company with a good services, a good platform for your customers. And if an entrepreneur comes to Orange or send a business plan to Orange saying, okay, I want to do an exit, first we will not consider this business plan, because what we buy is sustainability. And often, the sustainability of a company is linked to the management team, is linked to the people who have the vision in the team. So if you think first about the exit, you will not make an exit with Orange. And we made effectively recently 2 major acquisitions in the content and aggregation field. Why Deezer? Why Dailymotion? First, because they are very nice brand. They have been able to build a nice brand on their topic, on music for Deezer, on video for Dailymotion. They have a scalability. And when we look at Dailymotion, it's obviously a French player, but they have more of their user. Today maybe 80 million unique visitors outside France. And this scalability, their technology, the way they have been able to build a strong platform, is what interested the most Orange. Together with the possibility for us to make a very good offers for customers and to provide and enrich much more all our services with video. So because as far as we have the vision that the video will be key for a mobile operator, for a telco operator, it's in 2 or 3 years, 50% of the usages on our network. So it's critical also for us to be able to understand how much the video, how much the streaming, how much all this will impact our network and our capability. So, but if you think about the exit with Orange, think about building a sustainable company with nice services. And we never look at companies which do not have synergies with our core business, synergies with our telecom business. Although we are, a key player in the digital field. We have our own advertising network. We have our own portal and web mobile sites. We made many acquisitions in the sectors. Maybe not PriceMinister at the beginning, but we've done many other acquisitions.
Price was not good, so I'm happy I didn't sell anyways.
And you were maybe not not profitable at that time. But we do understand that business, but as much as all those companies, those web-based companies, are much more linked with our core activity, which is being a mobile operator or carrier operator.
So can we expect to see more acquisitions in the same area in digital content? I mean, what is this something? It was just like 2 one-time shots. What's going on?
Whenever there's a company with a nice brand, with a nice platform, with a strong management team, with profitability, with growth, we always look at it. And
that's nice to hear. That's nice to hear.
And especially if there's a strong synergy with all our activity, that it be in the business side with Orange Business Services, that it be in the internet side. And clearly, recently, Deezer and Dailymotion were the perfect illustration of our strategy in terms of content aggregation on how we enrich our portfolio of offers with the content. So I don't know if there's many other Deezer or Dailymotion in France, but if you have one, please come to me.
Okay, well, now I'm gonna flip the question from the other side. So that was assuming that a lot of the people or companies in this room want to get acquired. A lot of people also have this idea that when someone, like, I'm just gonna use Orange as an example, acquires a startup company, that it becomes much less sexy, it's less efficient. I don't know, that it kind of ruins the product. Maybe I can ask you, and also Pierre, because he went through it recently. I mean, what's changed since you've gone through the acquisition? Has it changed anything for you?
Maybe I will comment on that. It's true that whenever we make an acquisition, we are always cautious that being acquired by a big company like Orange, with more than 150,000 people in the company, must be scary for those companies. And what we've done with Deezer or Dailymotion is that we have taken minority stake investment, or maybe with Dailymotion it's a strong minority investment with 49%. But the ambition we have is to let the Dailymotion team, which is an excellent team, to be able to have all the agility and the autonomy to go on doing its development, while benefiting from the synergy with Orange, but very much with agility and autonomy. So and this is why we thought that having this minority investment for the 2 first years was the better way for us to provide all the conditions for Dailymotion to go on its development. And having other fund or other investor part of the board will be also a strong, I would say, reinsurance for us that everybody will be focused on developing the company rather than maybe wasting time sometimes on the internal synergies or synergies that do not bring value for the product, for the customers.
And maybe Pierre, if you can also add.
Yeah, I think it's a difficult question because I haven't made statistics on it, but I'd bet that most M&A operations have failed statistically because it's very hard to integrate. It's very hard to have 2 businesses work together well because each business has its own priorities, and it's very hard to have 2 teams work together well when they come from different, different histories. And also, it's very hard to have employees, depend on the groups, but if you have a big group, it's very hard to have employees work with entrepreneurs, with all the financial dimensions that can happen as well. So I think it's very challenging, and my point of view. But I've got limited, limited experience on that. So just on PriceMinister, we've bought 4 companies, and then we've sold PriceMinister, and we've also sold 2 other companies. And what I found out is that it works when you have very, very clear synergies, like really something to do in common, to build in common, or when you don't have much to build in common and you are okay with it. And so I think that it's one of the 2. So if you buy a company because you feel it's a great company, and maybe the management is happy to sell a part of its shares, and they feel that they're taking too much risk, and you make a plan for them to stay many years, then and you do not do any synergies, maybe it can work. Or if you have many synergies and you totally merge the companies and you build something together, maybe it can work. But what doesn't work is saying, I love your business, we might do things together, but we don't exactly know why, but let's try. And you're sure it's not going to work because all the companies will have more prioritary things to do than do it together. I think that's something important. So the ambition has to be very, very clear and very so clear that it's written in a contract. I think. I mean, it has to be. Otherwise, expectations are not met.
Okay, so I think I'm just going to go to one last question before we take the questions from the audience. But I'll go back to Dailymotion. I mean, 49% acquired for what, 58.8 million. When we compare that with what happened with YouTube, what is it, 1.6 billion? It just kind of seems ridiculous. Is that a failure? Is that a success? Is that Europe? What is that?
No, I think it's a success. I mean, when you look at Dailymotion. No, when you look at Dailymotion, I mean, Dailymotion was created 5 years ago. I mean, we've been able to, and they've done a great job to build a company that has a presence over more than 20 countries, that is international, that is now profitable, that is going on its development. I mean, they have grown much more in Europe those recent months than YouTube, so, and they're still growing. I mean, even in the period where we were having intense discussions. So no, I think it's a good valuation. I mean, it's 6 times the turnover of Dailymotion, so it's I would say a good valuation, and we've been able also to turn out all the synergies into and all the work and the common activity we will do with Dailymotion into contracts. I mean, it means that at the day of the closing of the deal, that was last week, I mean, we're now crystal clear on what we're going to do with Dailymotion, how much we are going to integrate them into our offers, how much we will leverage a platform, how much we will support them in their development at the international level. And all this has been defined at the very beginning, and I think will be followed and will be also the guarantee that we execute all the value of the deal. But I think that nobody complains about the valuation and the amount of the money. At least the two parties agreed.
And I think, sorry to speak again, but I think it's definitely a great deal because, and you have to think about that's quite a big valuation for French companies anyway. I mean, that doesn't happen very often. And Dailymotion is quite a global brand, which doesn't happen very often either. So I think it's a great deal. Of course, comparison with YouTube is hard in terms of valuation, but you know, YouTube is once every 5 years, right? I mean, you have YouTube, you have one day Facebook, you have you had Skype, you have PayPal. I mean, that's very, very rare. So I think that the comparison is hard with Dailymotion. Even everybody's thinking about it, but it's hard.
All right, well, thank you. Let's take a couple of questions. So once again, just a reminder, if you can say your name and a question.
Hi, thank you for all the interventions. My name is Ahmed Dabi. I'm a business school student with an IIT background. My question is especially to Mr. Lempdes. You argued that the fact that valuations were lower in France was because of the low amount of competition due to the fact that not many French companies are buying startups. Is it really the fact when you see that many foreign companies or international companies are buying startups? I'm thinking about eBay, for instance. And the fact that the big startups are getting international with a lot of scalability and can be bought by any international startup. So is the competition argument in France really a good one? Thank you.
Well, I think we have 2 exceptions. I agree. I mean, we have 2 exceptions to what I said. First one is you could get higher valuations in 2 fields. The first one being B2C. So I think Dailymotion is a good example, or Deether are exactly, very good examples. And the other field is the medtech area or life science, because here in Europe you still have a kind of ecosystem with very strong potential buyers like Siemens, like Philips or others. And so here you could create competition. So just to be a little bit more accurate about what I said, in general, difficult to maximize the valuation with competition, with potentially 2 exceptions being in B2C and in life science.
Okay, can we take another question? I'm just going to answer really quickly a question that came up on the Micah. Somebody asked, why is everybody speaking English when they're all French? So I'm just going to remind you all, this is being live streamed in the US and on EU, so I imagine tons of non-French speakers are watching it. It's a really good chance for the French ecosystem and French startups, entrepreneurs, and investors to get a little bit more exposure internationally. Question. Thank you.
So it correlates to your remark because I'm not French as well. I come from Israel. I'm an MBA student here in Technion in a cooperation with ESCP. And my question is a curiosity question. Do you have here any implications of the labor rules? And because in Israel we know that we have a very entrepreneur spirit, but we have a very flexible and as the states labor rules and investment rules. Is the domestic environment is really in that sense has the advantage, and this is primarily for VCs and entrepreneurs, if it has the same characteristic in that area?
Are you asking a question to somebody in specific on this panel?
To the
Michel.
Well, I think you have to get the full picture. Labor laws is something we have to deal with. Probably different from what you could get in Israel or in the US is a fact. But I think, again, you have to take the full picture. And what is the full picture? The full picture is that in France, for instance, you could get your JEI, so you can have a tax benefit being a young company. R&D in France is very cheap, for instance, due to what we call the Crédit Impôt Recherche. And believe me, for a French company, high-tech company with many engineers, the price you have to pay, the salaries you have to pay is probably much cheaper from what you can get in Israel or in the US. So I think you can compare only the labor laws, but this is only one aspect. I think that in France, many things are being done to help young companies. We could talk about the FCPI, some funds with tax benefits for individuals investing in innovation. You have Oseo Envar giving some subsidies to very young startups. You have Crédit Impôt Recherche. So it's very difficult to focus only in that point.
If I may add something, I think the only downside is that it's a bit complicated to find the Crédit Impôt Recherche, GI. I mean, it takes time to deal with that. But in terms of labor law, I think cost of labor in France is not that high, actually. And rigidity, like difficulty to lay off people and 35 hours, etc. I think that in a startup, it is a bit theoretical because we're in a position where we really all want to have the best engineers. So I mean, when you have an average engineer that you don't want to keep, he mostly will find another company that will believe that he is the best engineer, right? So they will hire him, and you will not have to lay him out. So I don't think it's such an issue. And about the number of hours per week, I mean, that's very theoretical, and that's a good thing. I mean, if you were only working 35 hours a week, we could not build any companies, right? So I think it's not a real issue, I'd say.
Great. So let's just take one last question from the audience.
Hello, I am Olivier from Lemna, which is a social currency on Facebook. We are talking about valuation and exit. Actually, we are all dreaming about the Facebook IPO. Several months ago, Mark status has been hacked, and the hacker asked to the people, to the community, why not asking to the Facebook members to buy action from stocks from Facebook. Have you considered ever to ask your customer or to your members to become your shareholders, as Professor Yunus and Social Business recommend?
Who are you asking the question to?
Any entrepreneurs thinking about exit.
Actually, I've thought about it very seriously, about raising money from our customers, not for an exit, but for money in the company to develop. And I found out that it's a bit complicated because after if you have more than 200 shareholders, it's appel public à l'épargne. So it means you're doing an IPO on your own. And then it comes to doing an IPO, and that's very complicated. So that's a bit difficult. But I love the idea. At some point, I even thought that when people would buy something on PriceMinister, we would tell them, you love the company, just give some money for us, and we'll do more marketing. And and I really believed it would be possible. And my marketing director told me I was stupid, so we didn't do it. But maybe he was right. But so now I think it's a great idea. And I think theoretically, all your customers should be your shareholders as well as all your salaries, your employees. But I don't think it's really doable, unless you do an IPO, right? Of course.
Okay, I guess Oleg, do you want to comment on that? Have you ever thought about going a crowdfunding type model?
Well, in fact, the two companies I created are kind of crowdfunded because I like businesses where the working capital is negative. So it means you work with the money of your customers. I mean, so that's
Not
better.
bad.
That's better than to work with money of VCs because at least you don't get diluted. But so yeah, it's the kind of business that I really like, where in fact people prepay and it's how Fotolia works. In fact, we sell something that is virtual and we pay our photographers only when the sale happened. So. And customers, prepay some credits to buy. So on one side we have, money in advance, and on the other side we pay our supplies later.
Okay. All right. Well, let's hear it for our amazing panel. You guys are great. Thank you.